Hey, Lee Phillips again. I want to talk to you for a minute about tax audits. Yeah, that's a dirty word, I know that. But the question is, what can you do to lower your risk of an audit? And this is going to become a big deal, guys, because as we speak, the IRS has 78,000 new tax auditor positions available on the internet. You could be a tax auditor. I'm sure that they'll take anything that breathes. If you can fog a mirror, you can be a tax auditor. How do you get out of this trap? Well, there are a number of things that you can do. One is, how are you filing your taxes? Are you a sole proprietor? As a 1040, there's not a lot you can do. I'm going to admit that. But if I have a little company, and you need a little company for your tax shelter, problem is the accountants never teach you how to use your little company as a tax shelter, but you need to use your little company as a tax shelter. So you've got a little company. Are you filing a Schedule C? Are you filing a Schedule E? If you're a real estate investor, I will tell you that if I have a big Schedule C, I'm going to say a couple of $100,000, or Schedule E, that's automatically going to trigger an audit in the IRS, because people who are actually making money in a little company or even in the real estate are smart enough to have a company out in front of them for asset protection, and it allows you to do more with taxes. So if you got a big Schedule C or a big Schedule E, the computer's going to kick it out and a human's going to look at it. But that means you're on the audit track. And by the way, they want to increase audits 100%. Not 100%, but 10 times. It's huge, guys, what they're out to do. They want to create another $1 trillion a year through audits. That's the goal. You need to keep your receipts, and you need to make sure that you don't have any big spike issues in your tax return. Now, what do I mean by that? If you have a little company, you're going to have what's called a NAICS code, and you need to check that NAICS code. They've just put out new NAICS codes, as a matter of fact. And make sure that the code, it's a 6-digit code, 6 or 9-digit code, and it's in different places on different tax returns, but it describes what you do in your little company. And they take that code and then they compare it to everybody else who has the same code. And if you're within the norms, you're fine. But if you've got a big spike of something, the computer's going to kick it out and a human's going to look at it, and you're on the audit track. For example, for years, I got audited all of the time. And it wasn't a little polite audit. This is an office audit. They send out a supervisor and an auditor and spend a week in my office. I've had that privilege a number of times. But why? Well, I didn't know until Ben came to my office. Now, Ben is a former special agent, special auditor for the IRS. And he looked at it and he said, okay, there's your problem. Years ago, I had gone to the biggest and best accounting firm in town. And they had known that I sell educational stuff, basically, for how to do your own legal stuff. And they said, okay, he's a retail salesman. So they had retail store salesman, retail store, in my NAICS code for my legalese company. The only problem is I travel. I give speeches all over the United States. I've given over 5,000 speeches. I have over 10,000 hours on stage. And I have a $150,000 a year travel budget. Well, how many little retail stores do you know that spend $150,000 a year traveling? Every year, the computer would see that big spike and they would kick it right back out. we've reclassified my NAICS code as a public speaker. They have a NAICS code for everything you do. They have thousands of these. And that justifies a travel expense. In addition, what we've done is we've cut it down. We don't put everything in travel. We put some in travel. We put some in hotels, food. We've broken it up so it's not all in one big lump and a big spike. So you want to avoid the spikes in your, I got a feather floating around. You want to avoid the spikes in your tax return. Do you have any big expenses or something? Break them up, get them down so that it isn't just a big number. Those are the best things you can do. Make sure you have the receipts when you do get audited. Make sure you know what you're doing when you get audited. In fact, I have an ebook out on 10 mistakes people make in an audit. It's about a 50-page ebook. It's a good book. And it walks you through what you do in an audit. If you happen to be audited or you want to learn more about how to avoid audits, this is excellent. I do sell it. It's, I think, $29 or something on the internet. But click the button below and I'll get it to you for what? $3.75? Let's do that. $3.75 for a $29 book. That's not a bad deal, guys. So click below and don't forget to register, subscribe to the channel here because I put out new stuff all of the time. Think about your taxes though. Think about how you can lower the numbers so that it levels out and you don't have a big spike. Look at becoming a company. I will tell you one other thing, and that is if you are a company, you're filing as a partnership. Now that could be an LLC, taxed as a partnership, or subchapter S, that could be a corporation or an LLC, or a chapter C. Any auditor in the IRS can audit a 1040 form with a Schedule C or Schedule E, but less than 10% of the auditors can audit a partnership, subchapter S, or a C entity. That automatically cuts your audit chance by a lot right there. So if you are making money, do have a little company, tax it as a partnership or as a S corporation, and that depends on how you make your money, or a C. Nah, you're never going to want a C. You're just not going to want a C. So tax it partnership, subchapter S. If you're making passive income, it's a partnership. If you're making earned income selling products or services, it's subchapter S. But that will cut your audit chance right there by almost 90%. This is Lee Phillips helping you cut your audit chances.